Hey traders, we're covering Ethereum here for a day in the 100, and pretty important swing line developing here. We'll do a top down, and I just want to share a simple concept, two simple concepts to kind of help you sidestep some of this intermediate term weakness and all this kind of this soft patch that the market's been experiencing. So anyway, let's just get right into it. The weekly and monthly charts, you can see how vertical we went. Again, we're always talking about angle and distance away from the 8. You're still not even back to the 8-month moving average, which is all the way down at 500. So the prior monthly low is right around the 700 area. You're going to see how that's pretty key on the weekly level. I don't care much for this cycle. There's just not enough data. Now, on the weekly level, okay, still a long-term uptrend. You can see that we broke the 8, which allowed for this kind of intermediate term move down. But there is a lot of risk still, guys, in this market. I mean, we basically based and broke out here above 400 and then went right to 1400. I mean, that's an incredible advance. And so for us to pull back, I look at this wall here. I like to use this wall concept. So here's the breakout. So take here up to the high. You can view that as one giant candle about halfway. Or if you want to do a Fibonacci retrace, I mean, we're well below 50% retrace. Even if you think about the entire lifespan of this coin up to 1400, 700 is 50% retrace, right? Of the entire long-term move. So we're kind of back at areas where we most likely are going to get a higher low. And then, you're making higher lows. Here's one. All right, so this would be another long-term higher low. Whether you get that here or even we come back and retest like the breakout levels around 400 or 500. So that's a lot of distance though, guys, being below 700 to sit through another pullback all the way back to 400. I mean, that's basically going to get cut in half again. So the key is not to just be sitting through these drawdowns. It's okay to take some off the table if you break the 8, if you crack 700, just go to the sidelines and let these cycles play out. The weekly cycle, I mean, there's all kinds of room for this to keep coming down. So maybe we don't see a low until, from a timing perspective, closer to March or April. I mean, even I was looking at the monthly cycle on Bitcoin, you might cycle down into May on the monthly level if a full monthly cycle played out. So it just is what it is. There's still a lot of risk involved from these prices. We'll go to the daily chart. Now the daily cycle will give you good swing moves. So when this cycle crossed up here, we had a 3 to 5 day drop, 3 to 5 bar drop. Now maybe we go sideways or bounce. But from a trend perspective, what we care about on price here is the fact that we broke the bands. Anytime you break the bands, you've changed the TMS in our model, which is how we view the uptrend. You can get a deeper pullback back to the 200, back to pi. Pi is not down. Pi is all the way back here towards 400. Again, that same breakout area. So kind of broke out on the daily actually at 500. That's where the 200 is. So we bought some into this dip. You couldn't follow through, crack these lows today. I took a lot of my Ethereum position off. And I think, we're just going to give it time to play out. Maybe I'll get back in lower. Maybe I do have to pay up and get back in a little bit higher. But I'd rather miss out on a move back up to 800 or so than sit through another drawdown all the way back to 400. And then the other thing I wanted to share was we have not taken out the prior day's high since this day in January. You can just see each day we failed to get back above the prior day. And so that pattern hasn't changed yet. So that would be, you got to get me above the prior day's candle before you can maybe start talking about an intermediate term move back up. You can see the direction of the eights. I mean, any bounce is going to be a bounce to a lower high, more than likely. So you can key off of this swing line, as we call it. But when you start breaking the bands, and we cut a lot of risk on a lot of positions today, just because we're not going to sit through these drawdowns all the way back to pi. You're just going to give way too much of your profits back. You won't have any capital to buy when you get back to better levels. So that's where the risk is on Ethereum. 4 hour. Again, nothing but lower highs. Nothing but lower highs. So you're not going to make a higher high now until you get back above 1,000. We had a pretty good bounce down here. All you did was make a lower high. Boom, back to new lows. All right. So there's no reason to call an intermediate term uptrend or get aggressive at all. It's just you don't want to be buying lower lows. There's a bullish engulfing here. But again, if you guys bought anything well here, you did buy 700. You got to be trying to take some off if we bounce back 900 to 1,000. That's all I have to say. The near term's been bearish, so I don't play this market on the short side. I would like to. I'm in the U.S., so I haven't found a good way to do that. But all these near-term trends have been bearish. You're supposed to be day trade seller. That's been the best way to day trade the near term. Everything's bearish here in the southern hemisphere. So there you can see, guys, 880, 960, that's pi. That's most likely where you're going to get a lower high if we do bounce here. Somewhere around 880 to 960. If you bought well, I'd be taking some off up there. All right, I hope that helps.